Hi, I'm Ryan Gass and I'm the owner of Dream Digs. We are a local realty company here in Louisville. We help people buy and sell houses every day. Let's take a look at this month's real estate market data so that when you're ready to buy or sell a home, you have the best information at your disposal. Let's flip over to the computer screen and have a look. Hey there, welcome to the computer screen. We are taking a look at the Louisville real estate market here through the second quarter of 2018. Before we dive into the long-term trend lines, let's take a look at what has been going on over the last 12 months. Just a quick look here, we can see that the number of listings took a nosedive, number of new listings coming onto the market took a nosedive over the winter as to be expected, and then coming back into the spring and summer here. It always picks up, but as you can see, this is just seems to be kind of a never-ending story over the last few years. The number of new listings coming onto the market doesn't quite match up to the year before, which further drives up the average asking price, which is this pink line right here, which naturally, in most cases, should drive up the average sale price. And indeed, as we'll point out again here, on a long-term trend line, we have now officially reached yet another all-time record for average price tag for an average home here in the Louisville area. The absorption rate continues to be anemic, just super low absorption rates there. Again, average greater Louisville area. We can see that the average days on market continues to be low. Anything under 90 is really anything under than anything under 6 months worth of absorption rate, and anything under 90 days on market is a seller's market kind of by definition. We continue to kind of hover around this 54 days on market from an average citywide standpoint. So those are your last 12 months worth of data. Let's switch over to the long-term trend line charts, which show us where we are at in comparison to the last 20 years worth of data. Okay, so here we are. We're looking at a chart of the number of single-family residential properties that have sold on a monthly basis over the last 20 years or so worth of data that I can get out of the MLS. If you recall, last quarter, so end of Q1, we saw a danger sign where the low water mark of the past 2 years had actually been going down. So our lows were getting lower, and that's a bad thing when you look back at the Great Financial Crisis, or the GFC as it's known in the financial world. You can see that a trend line, a long-term trend line, was broken, and the definition of a rising market is when the lows are getting higher and the highs are getting higher. As you could see, that's what happened from 01 to 07, and then we had a sharp downturn where the lows were getting lower and the highs were getting lower. Okay, pretty simple stuff here. The numbers that originally came in the first 3 months are kind of preliminary numbers, if you will. There's been 90 days worth of updated data that has come out on the MLS. This would be realtors who had late closings and credited those to earlier months, or adjustments that were made after the fact. All that said, the updated data through second quarter 2018 shows us that after those numbers have been adjusted, we actually no longer have that situation that I was kind of worried about, where we were starting to see lower lows. With the adjusted data, the lows continued to get high, We do see the fact that our high water mark in May, June of 2018 has not reached the high water mark of the last 3 years. So that's a bit of a concern, but we will kind of continue to monitor this. I'm kind of neither here nor there looking at this past data. I'd be much more concerned if this number truly were sharply breaking this red trend line here, but as of right now, not a whole lot to be super concerned about. Monthly sales volume again continues to be strong. This dotted red line is the average trend line over the last 20 years, so we are and have been and continue to be above long-term trend line there. Average sold price, this is kind of the big ticket item that everybody should really be aware of if you're thinking about buying or selling real estate here in the near future in the Louisville area. The fact of the matter is we have broken yet another record. Okay, so our average sale price, hopefully that can pop up on the computer. You can see that our average sale price in Louisville at the end of June 2018, according to these preliminary numbers for Q2, is $234,000. I thought we wouldn't break this record that we had in June, July of 2017, which we were at about $220,000 for an average sale point. We've just kind of blown that out of the water over the last 12 months. So that was a surprise for me. Good to see if you're a seller. Tough times if you're a buyer. That's just kind of how it goes. We are above long-term trend line from an average sold price standpoint, and have been solidly for the last couple of years. I'd say at least 2 solid years. As always, doesn't mean that there are no bargains to be had. I'm still seeing bargains out there at many price ranges, but you just have to dig a lot harder and be prepared. If you're a buyer, you're a serious buyer, and you think you want to buy a property, whether it's something for you to live in or something to fix up and flip or rent, you got to be ready to pull the trigger. That means you've got to have your money on hand, whether that's a pre-approval letter or proof of funds. I'm constantly drilling that into the heads of my buyer clients, because if we see something that you like, you got to take action, and you got to take action now. Average continual days on market, that's what that means. So how long does a property sit on the market before going under contract? That number continues to be below this long-term trend line. Of note, kind of a minor note, something we'll keep track of, the lows had been getting lower, but now I've kind of noticed here in the peak selling season where the lows should continue to get lower. There's actually been some pushback, so the market maybe has been pushing back a little bit, so not as willing in general to jump on properties as soon as they hit the market, which is kind of what we were seeing last year and the last couple of years. I hesitate to make a firm call on that until I see more data over the next quarter, because, quite frankly, anything that you derive from the days on market is just outright refuted by this. Assuming this number is correct, and again, we'll take a look 3 months from now at the end of Q3 to see what this actually is. These are, again, preliminary numbers, but if that stands to be the case, then we are in still a very strong market that just keeps on getting stronger. So hope that helps. Always like to look over the last 20 years trend line to see where we stand, because real estate is kind of a slow moving beast, and I find this to be very helpful. Hope you did as well. Any comments, questions, or concerns, let me know. Thanks for watching.